Welcome back to Mining Stock Daily, everybody. Trevor Hall here, reporting from the LME Week festivities in beautiful, sunny, warm, mid-October London, which is kind of crazy. I may have overdressed here a little bit, not prepared for this really unseasonable weather. But happy to welcome in a new guest, somebody who is a London loyal. Her name is Vivienne Lloyd, and she's the head of base metals research over at a company called Open Mineral. Vivienne, thank you so much for joining us here.
Thank you. So Open Mineral is basically one of the smaller trading companies. We started in 2016, 2017 with the idea that we could build a platform to facilitate the easy exchange of materials in the market. So it was kind of forward-thinking, bit of a startup, trying to introduce more technology into a sector that is quite traditional and has quite, you could say, archaic trading habits. And then since then, we've expanded into more actual merchant activities. So we effectively trade copper concentrate, zinc concentrate, lead concentrate, and gold concentrates around the world.
And tell me about your career. How did you wake up one day and be like, I really want to trade metals for my life?
Kind of funny. So I went to uni and then I thought, oh gosh, I'm probably going to be sat behind a desk for the rest of my life, so I should do something before I start my proper job. So I ended up going to China and teaching English for a year, and I was supposed to figure out what to do with my life, and I remember being on the way home and thinking, oh no, I didn't do it. So I was at home for a little while and I saw an advert actually in a newspaper, that's how old I am, for this company called CRU, which is a research company. And they were talking about travel and commodities and things. And I thought, well, actually, I'm not very familiar with this world. What is it? Went down to London, had some interviews, and got the job. So I started working in chemicals initially, in phosphate rock. And so I went out to a couple of mines, and I started to think that mining was pretty cool. And then a job opening came up in their copper team. So I moved across to that. And then since then, I've worked at banks and trading companies, and now at Open Mineral.
How has the industry of the metals trade really evolved and changed? And I want to ask about the last 3 years because I think that's important, but maybe in the broader scope, how has it changed in the last 15 years?
Well, I think when I was just getting into the business, so this is sort of 07, 08 sort of time, China was the buzzword. China was growing extremely quickly, and that had become a very exciting point in the market. There was a real bull market for metals in the early 00s. Then, of course, we had the GFC. The industry had to change again, but what we found was that while some of the developed markets took some time to recover from that event, China came roaring back with a massive credit injection. It was building property, it was building infrastructure, and it was investing in the manufacture of export goods. And so China sort of rescued the market at that point. Then we went through a sort of a long period of a bear market, and then in the last few years, obviously, we've all been impacted by COVID, and that has meant that there were some isolated events like sudden rate hikes in sea freight, for example, or congestion at the port of LA. All these types of things started to go on, and it made the market very interesting, very dynamic. Then, of course, we've had a lot of geopolitical events that have occurred this decade, not most recently one over the weekend, and that always impacts your ability or trading companies' ability to trade with certain counterparties or certain countries. So that has been a shifting dynamic also. But the rise of China has probably been the thing that I would point to as the most dramatic. It was already identified as a key growth area, large growth area 25 years ago. But in the last few years, we've seen things like Chinese share of copper production going from 10% to sort of 50%, with its growth in smelting capacity and steel capacity and everything else. So I would say, its domination in the market now has been a really big, interesting change.
You mentioned copper, so let's talk about these like supply-demand charts and the narrative around copper that, forecasting for the next 10 years, they're massive. People in the West are expecting a massive deficit of copper supply based on the growing demand through the electrification of infrastructure, and globally and through developed companies. But here we are, and the copper chart doesn't look great. I mean, we're sitting about $3.60 a pound. I've seen forecasts that we can expect maybe $3 copper just based on the fears of recession and slowing demand, global slowing demand. But those bulls are still out there just, pounding the table that on this supply deficit in the future. I mean, as a trader that works in everyday present, how do you kind of keep your cool of future supply demand ramifications, but knowing today is really, I've got to focus on today?
It's an interesting one. I mean, if I was to be a bit cynical, I would say it always does make me smile a bit when I see these headlines with, mining companies in call for higher prices, shocker. Like, what are they going to say? They're not going to say that the price should be lower. That's not going to take place. I think there's definitely some very interesting areas of copper demand that are growing very quickly and will be part of the future of copper use. But I would always think to myself, and it partially explains what's going on with prices at the moment, that you have to recall that the largest proportion of copper consumption is in fairly traditional areas, like construction, like basic infrastructure, like AC units. And, I've been hearing some things this week from some of my industry colleagues about the state of demand in certain areas. Apparently it's quite reasonable in China at the moment, but not particularly exciting. But I've heard some fairly bleak assessments of the picture in places like Europe. I think North America is doing a little bit better, but still there are some headwinds there. And so it's that side of the market that 80% of boring traditional use, just cables going into buildings and going into new infrastructure projects, excluding, of course, the fast-moving greenification projects. And those areas have really been impacted by higher rates and people's ability to invest in business.
How do you describe infrastructure builds now? Right? I mean, you've had been watching infrastructure for a number of years. Where are we at now?
So there was a kind of a sweet spot post-COVID where it seemed like everyone in the world was building out infrastructure, and that was great. We had Biden's New Deal, we had the Green New Energy Plan in Europe, and then we had China, as usual, always investing quite large sums into infrastructure. But what's happened is Europe, of course, has been impacted heavily by the effects of the war in Ukraine. North America has had very large ideas about some of the infrastructure projects, but what we learned was that some of the execution wasn't quite following through on that, which was a little bit disappointing. But still, I think that there's been some quite interesting infra development there. And then in China, what's happened is a lot of that infrastructure was often kick-started by local governments who wanted to, improve their city, build a new bridge, improve productivity, highways, railway, etc. But local governments in China have been heavily impacted by the headwinds in the construction sector because, of course, a large proportion of their revenue was actually being generated by land sales for construction projects. So in a situation where China's construction industry is facing severe challenges, that means that their revenues have depleted, and therefore their ability to ignite infrastructure projects has been impacted as well.
Where are you seeing maybe surprisingly growing demand where you least expected?
I thought there was some really nice comments earlier at the SMM seminar. I was chatting about it earlier. A former colleague was pointing to the investment in solar and wind in China, which is going at an incredible pace. And then also EV demand, of course. China is the world's leading producer of EVs. Even Europe has started to get a bit nervous about its autos industry now with the spectre of mass imports of Chinese vehicles. And so the fast growth there has been really dramatic. And then on a kind of a micro level, I actually am nerdy enough to go after the semis plants around the world. So this is semi-manufactured copper, which is what happens to copper cathode out the smelter. It goes to these plants to produce things like wire rod, foil, rods, bars and sections. And then those products then go into consumer goods, like the rod will go into cables and wires and things. What I have actually spotted is investment in copper foil. And these are going to be used in electric vehicle batteries. And there's quite a lot of investment, not just in China, which is always investing in these types of factories, but I've seen it in Europe and I've seen quite a lot in the United States as well. And that really fascinated me when I actually saw the growth of foil capacity being built out, and quite large projects like 100, 200,000 ton projects.
Can you describe to me what copper foil is? Because I'm clueless.
Well, so it's very thin copper. So effectively it's used to create, I believe, the electromagnet, so the coil that goes around the battery to create that electric field. And so the batteries use that, so they need to create a huge amount of it. Now the thinness is very fine, but I wouldn't be able to quote you exactly what the thinness, the thinness level is.
That's very fascinating. What about countries that maybe, like I've been hearing a lot about the growth of India. Actually, are you seeing copper demand grow out of India and maybe taking some of that market share where China and the U.S. now has a void?
I think we could easily say that India has very fast growth, and I would say it exceeds that of China, but it's coming from a lower base. So 8% Indian growth is not going to compete with 4% Chinese growth at this stage, so it's just the magnitude is lower. That said, we have seen more interest from Indian companies to invest in production of copper in their country. So next year, we're expecting to see production from the new Adani copper smelter, which is coming in on the western coast of India. I believe the refinery is going to go first, and then the smelter will follow later. And then also there's the potential for the restart of a closed Indian smelter. So if those things happen, we'll have sort of 3 important Indian smelters.
On the topic of smelters, I gave a presentation a couple weeks ago to a number of macro investor and money managers, and I had put up the Apple's refining and smelter list, and where they have all their metals refined, and half of it was from mainland China. And this was a couple weeks after the Chinese government banned the use of iPhones within the government, and so I just made this statement as like, if you think that they're actually just going to stop at banning iPhones, like there can be some geopolitical risk here of having majority of your metals smelted in mainland China. But, on this, for U.S. and Western manufacturing, I kind of look at this story as potentially a huge problem in the future if your geopolitical ties really start to unravel. What is the smelting and refining capacity for the Western world without mainland China?
Ooh, so I'd say it's probably about 50% in most of the metals. I'd have to check my stats on some of them, but there still exists actually a sort of a resilient smelting sector in many parts of the world. So the United States is actually a big producer of copper, both refined and concentrate. So you have you've got the Kennecott smelter in Utah. You've got assets that are owned by Freeport-McMoRan in the south of the country. There's also smelting that remains in South America, although that's coming under pressure. In fact, the Chileans recently closed one of the smelters, Ventanas, because of some pollution concerns, and also because often the netback on selling copper concentrate rather than cathode is actually higher for the nation of Chile. And then in Europe, you also have remaining smelters. So we have Arubis, a very dominant, large, important copper company, headquartered in Germany, in Hamburg. We have Huelva in Spain, which is owned by Freeport-McMoRan, the US copper producer, and another number of other assets in Scandinavia and in Bulgaria. So there is actually a resilient industry there, and I think what you find is that while the rise of the Chinese smelting industry has been respected, most people in a trading market would always prefer to be able to diversify just naturally between different parts of the world. So I think there's always been that sort of making sure that that material is going to Japan and China and India and Europe, for example.
We focus a lot on the explorers and developers in this podcast, and so I think you might be the first actual metals trader we've ever interviewed.
I research.
But it's like an area of the industry that like very much intrigues me because I just don't necessarily understand much of how it functions or the uniqueness of it. I've read the Mark Rich book and totally understand. Like that was Mark Rich, but kind of describe to me like where Open Mineral comes in. Where does the business process start within the life cycle of a mine, and then what does an end deal look like?
So we're effectively connecting the producers and the consumers. It's not necessarily always the case that vertical integration has taken place between mines and smelters. In some cases, there is integration, so the smelter just takes the material from its own mine. But in a lot of cases, the business decision has been made that they want to be custom smelters, and in a lot of cases, as you discuss with the project developers, people get a project together, they launch it, they attract the funds, they build it, they start going, but they don't have smelters. And that's always been the way the industry's worked. So the traders really, the role is to step in and to make sure that the miner is able to attract funds by saying, well, we have an offtake with this company or that company or another one, so that the financiers can feel comfortable that there's going to be sales, obviously, at the end of the process. And then on the smelting side, smelters often have to balance the intake of complex materials, especially as we progress, particularly in metals, in base metals, we're finding more and more elements that can be challenging for smelters to handle, like arsenic, fluorine, chlorine. One of the functions that traders can provide is to gather material from different places with different complexities and blend those and then send that material to the smelters, and now they have the confidence they'll be able to treat it without causing too much difficulty in their assets. So that's an important function that's also provided. And I think it's always helpful for both smelters and miners to have a number of different parties that they can do business with. The greater number of counterparties, the greater the liquidity, the best price they're going to achieve.
How competitive is this space right now?
Well, I think everybody who's in trading would tell you it's been a tough year because of rate hikes. I mean, it's a business that has quite thin margins, and we're dependent on financing. A cargo of 20,000 tons of copper concentrate is probably going to cost about 25 million to finance. So in an environment where rates have risen, obviously you can see that there's some margin erosion that can happen.
So with these higher rates, it's been slowing demand. How has your job changed? Or maybe not changed, but I'm sure your research and things, the shifts in the macro and the trade definitely have changed over the last 2 years, but probably to extremes the last 6 to 8 months. That's what I assume. Tell me I'm wrong.
I mean, possibly. I mean, what I principally do for our traders is I look for where we can see market opportunities. So we spend a lot of time gathering data. We're a very data-intensive company. We're a tech-backed trading company. So we look for pockets of opportunity where we can see, we would actually model the long and shorts to the level of regions, countries, and even companies. So we could see where an opportunity might present itself. And then we do that on a regular basis, on a quarterly basis. So we could say to ourselves, okay, Northeast Asia looks a little short at this particular quarter in this particular metal. Maybe we should up our conversations with our counterparties over there. Similarly, you might see some area looks a little bit long. We also track allocations data, and we try to understand where people's material is going if they're a producer. And we might think to ourselves, okay, these guys, there might be a little bit extra appearing there, let's go after that. And then also on a global sense, I will model concentrate balances, and so we will say, right, okay, this market looks the shortest, this looks the longest, and therefore we will focus our efforts on this material rather than that material. So that's the way I try to help them, manage these choppy waters.
And so who would the end client be in that type of case where you see those opportunities?
My own traders. So in my firm, so that would be an internal client. So we have probably 12 physical market traders, and so I will be constantly having conversations with them. And so I'll be coming back to them and showing them my work and saying, we actually did this just before LME Week, and saying, look, this is what the market looks like, so this is where we should be focusing our efforts strategically.
Okay. With the induction of the Inflation Reduction Act, or we use the word reduction loosely, and we've seen a number of developed countries finally create a critical mineral list. Has that put an emphasis on those metals within your research? I think us miners, people involved in the industry, we always knew it was important, but finally Washington and Ottawa got behind it with some paperwork. And they maybe don't understand the dynamics of how the mining and metals sector works, but at least it's in some headlines right now. So how has that emancipated at all the base metal market because of the political acts that have been put in place?
It's an interesting one. Initially, when they started building these lists, they were really looking at some very important materials for certain products, like, solar panels or something like that. But they were looking at quite niche markets, things like, gallium and stuff like that. And that was certainly, and rare earths and things. And it's certainly interesting, and we would always keep our ears open if opportunities present. But it's, they're smaller markets, and there are some trading companies who specialize in that type of end market. And I think that it's, from a research perspective, it's often really difficult to get decent information about what's going on in those markets because they are so niche.
In the rare earths.
Rare earths or some of the smaller metals. I remember having a conversation with someone from a zinc smelter once, and that person was telling me, I'm the only person in the world who knows the price because we're the biggest people who sell this thing. And I was like, go on, tell me, but he wouldn't. So yeah. Recently, however, we've seen some of the larger markets enter those lists as well. So I think in the United States, if I'm correct, zinc has entered the list. So that's, a base metal, and it's quite big. It's interesting because the United States does have actually its own zinc resources, but evidently it's been determined that this is a material that they want to make sure they have access to. But one of the things we think would be useful is if we saw something like copper go onto the lists, because that would be quite interesting, and that would create a little bit of competition over the material. But at this stage, it doesn't particularly dictate how I would go about things. We're very global and we're very sort of large base metal focused.
Do you see a time where those critical elements or rare earths like become more mainstream and you can easily find a spot price of, say, niobium at one point?
It's tough. I think what's happened is people from some of the research and information companies have stepped into that information vacuum and they have started to conduct price assessments in some of these markets. So I think companies like CRU, Fast Markets, I believe S&P Global, they do actually chase down some of these markets and core people and try to determine what the prices might be. The trouble is in thin markets and small markets, if you do need a certain number of trades to feel like the assessment, you can feel confident about it. And while I'm sure everyone works very hard, but I actually did price assessment once in my past for CRU. And sometimes you got a situation where you were speaking to people and really there were no deals done in the couple of weeks or months since you last spoke to them. So you'd have to sort of roll over the term and say, well, this is probably what the price is. But you didn't really know, I have to admit. So it can be tricky. It can be very tricky. But there's definitely effort being focused in that direction by several of the companies.
And with the rare earths, are you able to look for opportunities within your work to where, I guess how does the demand for rare earths get filled? When it's such a small, thin market, and China being obviously the largest producer of rare earths, but there are operations out there that there's probably offtake opportunities. But I guess how does a rare earth market actually function right now, given how small it is?
Yeah, it's a good question. My assumption, and the comments I've had from people who've encountered it or bumped into it in the past, is that it tends to be a very tight relationship between producers and consumers and much less trading around the edges. It's much more likely that someone will do a 2-year deal or something like that. So the mine feels comfortable they have a customer and the user feels comfortable they've got the supply so they can make their own business plans.
I did want to ask you about Saudi Arabia because obviously they are putting in a lot of effort into exploration and mining. Where do you see the opportunity with the Saudis given more supply coming online here in the next 10 to 20 years?
Supply of which materials?
Copper.
Oh, copper. I think it's well acknowledged that the Middle East as a region is looking at developing industries beyond carbon. And so it's quite interesting. We are actually headquartered in Abu Dhabi, so we have a lot of conversations with Emirates and Saudis about these markets, and we try to be helpful and provide information and advice about how to go about these things. That region's already been quite developed as far as aluminium has gone, so there's a lot of development there that's taken place in many of the countries. Going into base metals is a little bit new for those countries, but there's definitely interest and certainly when looking at beyond carbon and if that region could become a center of new energy, then you're going to need things like lithium and copper to be developed. So I think it's super interesting and it's obviously a very well-financed region. So I think exciting things could definitely happen there in the next 10 years.
And the Sovereign Wealth Fund there looks like they are all in on mining, which is pretty incredible. But somebody, in a market like what we're seeing now, at least on the exploration and development side, where there's just a complete lack of capital flow coming into the sector. I mean, if you do have the capital, such as the Saudi Sovereign Wealth Fund, and you want to direct it there, would now be the best time to start allocating that, knowing that you could have a better cycle in the years to come?
Well, I mean, entry points are pretty important. Do you want to enter at a high price or a low price? Right. So, I mean, I would look at it from that perspective. I mean, one of the absolute best actors I've seen in the last 15 years who consistently make money is China's State Reserves Bureau. I absolutely love their model. What they do is the copper price, the aluminium price or something goes really low and they just buy loads of it. It's supportive for the market and it's supportive to state-owned smelters in the country. Also, it generates revenue and value for China because a few years later when prices are high and there's a tightness, they release that material back into the market and they're collecting a really good premium on the price that they paid initially. And it's such a simple model, and I always sort of think to myself, there's no way somebody else could do this, but
we drain our SPR in the United States, so we dwindle those reserves instead of refilling it, and especially on the metal side. I couldn't even tell you what kind of supply we have of metal reserves in the West.
Yeah, interestingly, in the zinc models that I've inherited from other people and past sort of generations of analysts, there always used to be a line item for American reserves of zinc, not copper. I don't quite know why that was.
Why not copper? Like
I don't know. Yeah, it's a puzzle. I think this is something you should investigate for a true crime podcast. Why does the US love zinc so much? It's strange. Not quite sure. But I think, I've spoken to some guys in the sort of hedge fund world about this before, and the fund world, and said, is there no way that somebody else can do this? And they sort of said, well, yeah, but that means you have to hold on to some copper for 4 years, and your investors don't want you to sit on, paying some rent in a warehouse for 4 years. Typically, investors want to see returns on a frequent basis rather than on a multi-year basis. So that seems to be the major hurdle for everybody else. But, I mean, it's a super winning strategy. You see it every time. It's brilliant.
Well, you'd think there's a lesson there for the West to learn, but we just kind of refuse to acknowledge that game plan.
I think it's fair to say there's perhaps been a bit of complacency about raw material supply and basic material supply, and I think that as you go back to these critical minerals lists, that there was something of an awakening in terms of ensuring that there's still access to these things, and some of the geopolitical events that we've witnessed in the last couple of years do point to that, because of course Russia was a very big supplier to the seaborne market. Well, it's the largest supplier of aluminium to the world outside China. It's an important supplier of copper, nickel, palladium, platinum, and then other materials. It's also quite a big zinc and lead miner. So that, I think, has focused attention.
I don't want to keep you too much longer, but there's been a lot of stigma in the metals trade because the headlines, oftentimes we see, what you think was a nickel delivery actually turned out to not be nickel. You've seen a lot of, the big name traders try to push metals through other markets from Russia via other markets to their delivery. I mean, it seems like there's a lot of eyes watching carefully on the global metals trade right now, at least in the headlines. I mean, do you feel that more people are paying attention because of the geopolitical issues we have here and making sure that Russian products don't make it into Western finished goods?
I mean, I think anytime when you get a sort of a clump of headlines at the same, in a short space of time, it's always going to focus eyes on that particular industry, and people from outside it might say, well, how could these things possibly happen? And there's sort of reasons for it, because there is so much global trade taking place. I mean, it's actually a very small proportion of the millions and billions of tons of metal that are moving around the world at any given time. But yes, it certainly creates that headline challenge for people involved in the markets. But I think that, in the context of the global markets and the amount of material that is actually being moved, it's somewhat of a small proportion. And I do think there are, numerous checks and balances that are supposed to be in place to prevent things like this happening. And so really what I would just say is that the observation of those checks and balances is where people should focus, and to make sure, for example, documentation is in order, inspections have taken place, people have looked at the quality of what the material is. And I think if you follow those rules, that I think that it's perfectly reasonable and safe market to be involved in or to be invested in.
Thank you so much for your time. I really appreciate it. This was a really fascinating conversation. I hope we can have you on again, because I'm sure there's going to be some headlines and some news I want to pick your brain about in the future. But it's just really fascinating. I love your city. I love coming here, but it's also kind of, it continues to be that central hub of the global metals trade. And so I'm sure you've got to be like super excited to wake up and do your job every day. At least I hope.
Definitely, but I tell you what, LME tires you out. My feet are already tired. It's Tuesday. But anyway, no, thanks so much. It's been really fun.
Thank you. All right, everybody, that's Vivienne Lloyd from Open Mineral, and we'll be back with more here from London in LME Week. Stay tuned. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.